Imagine walking into work on a normal Monday morning. You grab a coffee, sit at your desk, and start checking the numbers on your screen. Nothing seems unusual, but what if, without anyone realizing it, a single employee in that building had secretly accumulated losses so large that they could destroy an entire bank? Not a branch, not a department, the whole bank. It sounds impossible. But in 1995, that's exactly what happened. And the person responsible wasn't a CEO. He wasn't a billionaire investor. He wasn't even a senior executive. He was a trader named Nick Leeson. And within a few years, he brought down one of the most prestigious financial institutions in the world. A bank that had survived wars, economic crises, and more than 2 centuries of history. This is the story of how one man destroyed Barings Bank. To understand the scale of this disaster, we first need to understand what Barings Bank was. Founded in 1762, Barings was one of Britain's oldest merchant banks. For more than 230 years, it was a symbol of prestige and stability. The bank had financed governments, major corporations, and international trade. Its reputation was so strong that many considered it untouchable. At one point, Barings was even known as the unofficial bank of the British elite. If a bank like Barings could fail, many people believed anything could fail. But beneath the surface, a dangerous problem was growing. And it had a name: Nick Leeson. Leeson joined Barings in the late 1980s. At first, he seemed like a success story. He wasn't born into wealth. He wasn't educated at an elite university. He climbed the ladder through hard work and determination. Management liked him. They trusted him. Eventually, he was sent to Singapore to manage Barings' futures trading operations. This decision would change everything. In Singapore, Leeson quickly became a star. His trading desk appeared to be making enormous profits. Millions of dollars were flowing into the bank. Senior executives in London were impressed. Bonuses increased. Praise followed. Nobody wanted to question success. And that was the problem, because the profits weren't what they seemed. When traders make mistakes, losses are supposed to be reported. Risk managers are supposed to review them. Supervisors are supposed to investigate them. But Leeson discovered a way to hide his losses. He created a secret account. Its number was 88888. At first, the account was used to hide small errors. But as losses grew, it became a dumping ground for massive amounts of money. Instead of reporting losses, he buried them. And then he made an even bigger mistake. He tried to win the money back. This is one of the oldest traps in finance. A trader loses money. Instead of accepting the loss, he takes bigger risks, hoping to recover it. Sometimes it works. Most of the time, it doesn't. Leeson doubled down. Then doubled down again. The bets became larger and larger, and so did the hidden losses. Meanwhile, executives in London continued to believe he was making profits. The deception continued for years. Then came January 1995. A massive earthquake struck Kobe, Japan. The disaster shocked financial markets. Prices moved in unexpected ways. Volatility exploded. For most traders, it was a difficult period. For Nick Leeson, it was a catastrophe. His bets were suddenly moving against him. Every day, the losses grew larger. Millions became tens of millions. Tens of millions became hundreds of millions. The secret account was now a financial black hole. Yet Leeson kept gambling. He believed the market would recover. He believed one big trade could fix everything. But markets don't care about hope. They don't care about confidence. And they certainly don't care about desperation. The losses continued to grow. Soon they exceeded the bank's available capital. Barings Bank was effectively bankrupt. Nobody knew it yet, but the collapse had already begun. In February 1995, the truth finally emerged. The hidden losses were estimated at more than £800 million. At the time, this was an astonishing figure. The amount was larger than Barings Bank itself could absorb. The institution that had existed for over 2 centuries was suddenly insolvent. Executives rushed to find a buyer. Governments and financial institutions examined rescue options. But the hole was simply too large. Barings could not be saved. The bank eventually collapsed and was sold for the symbolic price of just £1. Think about that. A bank that had survived for 233 years. A bank trusted by governments and wealthy families. A bank once considered one of Britain's finest institutions. Sold for the price of a cheap cup of coffee. All because of losses hidden by one trader. Nick Leeson fled Singapore after the scandal became public. For a short time he was one of the most wanted financial fugitives in the world. Eventually he was arrested and sentenced to prison. His name became permanently linked to one of the greatest financial disasters in history. But many experts argue that this wasn't only Leeson's failure, it was also a failure of management, a failure of oversight, a failure of risk control. The warning signs were there. Nobody paid attention. The collapse of Barings remains one of the most important lessons in financial history. It reminds us that institutions are only as strong as the systems protecting them. No company is too old to fail. No reputation is too powerful to collapse. And sometimes the greatest danger isn't a market crash. It's believing that everything is under control when it isn't. Because in finance, a hidden problem can grow quietly for years. And when the truth finally appears, it can bring down an empire.